On Friday, a California regulator closed down Silicon Valley Bank Financial while the struggling company was trying to find a buyer and raise capital. This move has escalated the already existing turmoil, leading to worries about potential government intervention and significant losses in other banks and cryptocurrency markets. Silicon Valley Bank, also known as SVB, is a global commercial bank that offers financial and banking services to innovative companies and their investors. The bank specializes in providing support to technology and life science firms, as well as venture capital and private equity firms. SVB Bank provides various services, such as commercial lending, deposit and cash management, global treasury management, and foreign exchange, among others. On Thursday, shares of SVB Financial Group experienced their steepest decline in over 30 years, plummeting 60% and erasing $80 billion in the bank's market value. This decline had a ripple effect across the banking sector globally, with major U.S. banks, such as JP Morgan and Wells Fargo, losing over $50 billion in market value. Other significant banking names, including Barclays, BNP Paribas, and Citi, also saw their share prices drop. What happened? SVB is a Santa Clara-based bank that lends money to and takes deposits from Silicon Valley tech startups. It provided funding to 44% of all venture capital-backed tech and healthcare companies that publicly listed on a stock exchange last year, according to its website. There are two main reasons for the significant decline in SVB Financial Group's shares. Firstly, it is linked to the Federal Reserve's aggressive interest rate hikes aimed at curbing rising inflation in the U.S. This tightening campaign had a negative impact on SVB's bond holdings, resulting in a disclosed $1.8 billion loss after the bank sold $21 billion worth of its fixed income portfolio. Despite trying to raise $2.3 billion through stock sales to cover the losses, the bank was unsuccessful. Secondly, startups are facing increased difficulty in accessing funding as borrowing costs rise. As a result, there has been a high level of deposit outflows from SVB, leading to concerns of a bank run and prompting some of the bank's clients to limit their exposure to the institution, according to analysts. SVB's unique niche in the tech world is a real boon when that business is booming, but a problem when it's not, Interactive Brokers chief strategist Steve Sosnick said. How is it affecting other bank stocks? On Thursday, Silvergate Capital, a bank known for being supportive of cryptocurrencies, announced its closure. The crisis at this bank, along with that of another financial institution, sparked concerns of contagion effects throughout the entire banking sector, leading to a significant sell-off in banking stocks. Refinitiv data showed that the four largest banks on Wall Street, including JP Morgan, Bank of America, Wells Fargo, and Morgan Stanley, lost a combined market value of $55 billion on the same day. The KBW Bank Index, which monitors the price of the leading publicly traded banks in the U.S., also experienced a sharp decline of 7.7% on Thursday, marking its worst performance in almost 3 years. On Friday, bank stocks offered a mixed picture. JP Morgan's stock price recovered some, while First Republic Bank saw its stock drop 20%. Are investors worried? As concerns increase that the turmoil at SVB Financial Group could have a broader impact on the financial system, several major players on Wall Street have expressed their concerns. Michael Burry, the Big Short investor, tweeted on Thursday, since deleted, that there is a possibility that SVB could become the next Enron, referring to the scandal-ridden energy company whose downfall was emblematic of the 2002 stock market crash. In addition to Burry, top economist Mohamed El-Erian and trader Scott Melker, known as the Wolf of All Streets, are also expressing their anxieties regarding the wider implications of SVB's situation. What happens next? To protect insured depositors, the FDIC created the Deposit Insurance National Bank of Santa Clara. At the time of closing, the FDIC as receiver immediately transferred to the DINB all insured deposits of Silicon Valley Bank, the regulator said in a statement. On Twitter Thursday evening, billionaire investor Bill Ackman stated that SVB Financial Group plays a significant role in the world of venture capital, and he had previously urged the U.S. government to provide a bailout to the company. He went on to explain that if SVB were to fail, it could have severe long-term consequences for the economy since VC-backed companies rely on the bank for loans and holding their operating cash.